Hello viewers, welcome to our today's live episode on chart analysis. It has been a roller coaster week where we are having market volatility. A lot of people have made some money while a lot had actually lost a lot. So the focus this week is to look ahead and tell where we can take opportunities from the volatile market. What do we have to come? And in doing so, what I would like to introduce us to today is the use of the natural phenomenon of the Fibonacci sequence. Fibonacci sequence is a natural sequence that has the summation of the last two successive number will give preceding numbers will give rise to the next number. For example, if you start with 0 and 1, 0 plus 1 will be 1, so which means the next number is 1. If you do 1 plus 1, it will give you a 2. If you do 1 plus 2, it's giving you a 3. If you do 2 plus 3, it's giving you a 5, and so on. It's a mathematical equation. You can look that mathematical series. You can look that up on Google, on YouTube, read about Fibonacci and how it has it's evident in so many things of life. You see the spiral shell, you see the shapes of your hand, the length of your hand, the markings and things like this. A lot of things, even in the leaves. So I will leave that to the listeners to go and investigate and get some insight from what this natural thing is, and how we can take advantage of the sequence. What I would be focusing on is the Fibonacci retracement. If you are using the trading view, it is available in the tools option here. These Fibonacci retracement levels. Now I will just draw it randomly just to explain what it is. This is what it looks like when you pick it. I'm not placing it on any numbers now, but I need to explain the layers, the levels for you. You have the 0. Ignore the price levels here. It's automatically reading from the chart where it is placed. You have the 0, you have the 0.23, you have the 0.38, 0.5, 0.618, 0.781, then and so on. It continued upward. You have the 1.68. Now, why I'm bringing this, explaining this now, this is the 1.618. In other words, if you also Google what is called the golden ratio, this number would come out, and you also have the inverse of it, which is 0.618. They are very, very key numbers in the Fibonacci sequence. You can read about the theory of how they come about it. If you also love mathematics, you can also do some detailed proof of the theorem that brought about these numbers and how you can utilize them. But what we will be doing in our own case is its own application. So how do we use the Fibonacci retracement? That is the topic for the day. Before we go further into this, I would solicit, if you had not already done so, to please like this video and also subscribe to our YouTube channel, AFTechTrades. So yes, now I would begin the use of this tool. There are some key things to put in mind, bear in mind when you want to use this. First of all, it is more effective in a ranging market, in a trending market, either trending upward or trending downward. However, it could be used in a sideways market if you know how to use the different ratios. It could tell you from a sideways market when to expect a break. Okay, so having said that, this is the weekly time frame. I'm looking at the weekly, and when we use our tools on charts, it is better to start from the higher time frame, place the tools on the higher time frame chart, go down to the lower time frames, and then take advantage of what the tool is telling you in the lower time frames. Again, Fibonacci levels work across all time frame. If you are trading in 1 minute, if you are trading in 5 minutes, 15 minutes, whatever, even if you are trading in seconds, as long as you know how to place the tool and you place it correctly, the levels are authentic. Now, without wasting, but preferably what will happen is if you place the tool on the higher time frame, for example, I'm on the weekly chart window now. If you place the tool on the weekly chart, it is advisable to step down, maybe to the daily time frame, to utilize what the levels are telling you. That is number one. Secondly, in the upper time frame, the weeks, that is the weeks of the candles, counts a lot, unlike the lower time frame where they are just noises. So in this case, I would not be switching my chart as usual to the candle to the line. I will leave it on candlesticks because I'm in the very high time frame. So I will place my tool here on the high time frame. Now, how is it placed? As I said, I don't use it on the ranging market. If you see here, it's ranging here, so I'm going to leave this out. Sorry, it's trading sideways here. I'm going to leave it out. So I would consider that in this case, this is a high and this is a low. Okay, this is high and this is low. So there was a trend from up here. You have lower low and lower high. Lower low, lower high is forming a series of lower low, lower high. So in this case, it's actually trending downward. Now, to place this tool, you let me delete this and go back to pick it now and place it here and here. As I said, I'm going to consider the weeks because I'm in a higher time frame. Fibonacci retracement. Then here, this is the coordinate of the highest week here. I drag it down to that of the lowest week. So we are not looking at anything here now. Since it trends downward, I would want to make my, instead of 0, you could see that the numbering here is 0, 0.23385 up to 1. So I will reverse this, and this is usually done in the settings. So what will happen is I will click the settings here. I will go to style, scroll down and click on reverse. First of all, before I do this clicking, look at what I'm talking about here. You have 0.236 on. Immediately I click on reverse, it's going to change this numbering from 0 down this way. Watch what happened. So it has reversed the reading. So you have 0, 0.23, 0.38, 0.5618, and this. Now, let's zoom out this more and now interpret what this tells us. So if you look at the chart from 0, sorry, let me do, okay, yes, it's locked. Now from 0 here, it trend down towards 0.23. The natural first stop here, it did 1, 2, 3. Then around 0.23, you see it ranged a while, then moved again to the next level, which is 0.38. It stopped. Then it bounces back, touches this, and then do the continuation. At 0.5, it stopped again, then continue, got to 0.618, it retraced back to 0.5, continued. Then the region of 0.78 here, test back again, and then it moves straight to 1. Now again, let me go back to the properties. I want to extend it towards the right so that we'll see how these numbers extend right. Okay, I do this. It has extended the line, the levels towards the right for us to see what is happening. So back, I have not done anything. I've not done any analysis. I placed this in the daily time frame, right? And then we checked, sorry, in the weekly time frame, and we are checking what is the behavior of this. Note something here. When it got to the 1, which is actually 100% of this full length, it went back to 0.618. I mentioned something about this 618 before. It's a golden number. Then it touches it and it came back again to 1. Okay, even though along the line, within each Fibonacci region, there will be some consolidation and movement before it proceeds. Okay, and sometimes when it breaks it usually happens where there are news or something affecting the market, and it breaks it through immediately, but it comes back to retest that region. So what happened here? It got to 100, then it came back to 6.18, it come back to 100. In this case, a double touch here, right? Double bottom. It came back again to that region of 618 halfway. Then let's proceed forward to see what happened. Again, in that region, consolidated, went back to 7.18, consolidated for a while. It breaks the region and it becomes a support here. So when it became support, meaning it's going to break down further, right? Why am I having this? So it tested again, it went back, break it, and what is interesting here is that all the activities are happening at key Fibonacci levels. Okay, key Fibonacci levels. When it breaks it here, then you see this. So going forward, that is, when did I start? Let me look at the dates I placed that. This is October 2012. Okay, yeah, since October 2012. This is weekly time frame, and then it's played forward that way. So if I actually step this down to the daily time frame, go back to October 2012, 2021, sorry, it's far. Sorry, I need to take us back there. I want to see how it plays there. Then we will now come forward to see what is happening in today's market. I just need a place where I could explain the concept to you. 2013, so we'll soon get there. December, November, October. Okay, October 2012. Okay, we started here. Okay, the visibility of that me see, why is it auto lock price to let me use this, whether it will allow me. I need it to come back to this date instead of me scrolling back again. Let me go back to the weekly time frame. Weekly time frame, good. 2017, no. Weekly time frame, we are back here. Let me create the visibility to go beyond the weekly time frame only. Visibility on interval, current interval and below. So this will happen if I switch back to daily. I should see it on the daily time frame. Okay, good. It's on the daily time frame. This is 2017. Yeah, let me scroll back to where the starting point. Okay, so as I am saying, we want to see how the Fibonacci sequence applies, how we can use it to determine levels on chart. Okay, this did not pick from the beginning, but okay, then I will need to extend it. Okay, this is May, good. So it peaked from there. Let's look at the peak where this is touching. Where is our graph? Come on, come on, come on, load. The network is a bit slow. It's not loading. Okay, let me switch back then. Let me switch back to the weekly time frame. Okay, so as I explained, place your Fibonacci on the higher time frame. Go to the next immediate lower time frame to perform the analysis. If I go beyond this, we will not see the market, because market currently is around 2,000. That is gold to USD. So I would delete this. At least the initial explanation is there. I'll delete this. I'll move to the current market, because that is the focus for us to have this chart, this tool placed on our to study the market, what has happened in the past few weeks and what is likely to happen in the coming days. Okay, good. This is again the weekly time frame. We have the very immediate visible stuffs here. Is that we have high, low, high, low. Because it's the higher time frame, let me delete this. Delete. I use it to mark some ranges. I did some trading within the week. So if you see anything on the chart, sorry for the trade analysis. This was a trade that happened yesterday. Yeah, we will talk about that if the time permits today. So ranging from here, let's place this is the weekly time frame. Let's place the Fibonacci tool here, and then go down to the lower time frame to see how it played out. Come on. Okay, good. We have this, as I said, higher time frame. The lowest here is on this line. I place it, and the reading again. Okay, this time the reading is 0. Yeah, it's in the sequence we want it. Otherwise, you go into the tool and then change this and create it as just click on the inverse. It will retrieve the number for you. That is, if I want to read which will happen after this run. After this run, when I'm reading this run, I will inverse the reading so that we'll see the sequence it fall into naturally. So, having done this in the weekly time frame, I will go to the daily time frame. Now, back again to the weekly time frame. I want to mark the date. Let me use the tool shape to know. Yes, ellipse tool. I want to mark where I start from, so that it's easy for me to see when I switch to the daily. It's just a mark. If I switch to the daily, then no fill. Okay, good. Lock it. Let me lock this. Now if I go to the daily time frame, let me look for that shape. Is it visible here? Weekly. Okay, visibility, visible on this and below. Okay, so I go to the daily time frame. I'm looking for that. Where is it? Okay, let me, is it behind? Come on. Weekly, where are you? Weekly time frame, yeah. What is this date? Monday, August 2020. Oh, that's fine. Okay, Monday, August 2020. Monday, August 2023. Okay, it's a bit behind. Good. So it's going to help us. At least we have enough. Yes, I think it's here. Probably to 2020, August 2020, 2017. What is this? 2020, May, June 2021. What happened? Okay, good. So this is where we begin to read it from. Then let me extend it. No, property. I have to extend it towards the left so that it covers that region. Settings, extend left as well. Okay, good. It's extended left, and yeah, if you see now, because this is where the wicks plays its own impact. Although the candle, the first candle from this region is up here, but looking at on the weekly time frame, it was just a wick on its own. That's why I said wicks in the higher time frame matters, so you consider them as well. So in the daily time frame now, what I usually do is I will change this to line charts. Okay, with line chart it easily shows me the layers and clearly. Okay, now the first travel, now I don't need this, I don't need it has taken me where I want. Now what happened is, as I explained before in the previous one, activities happen around the Fibonacci levels, the 0 level, wherever it traveled from here to the 0.23 region, then it reversed. It came back to the region, it began to consolidate around the region. When it breaks this region, the next natural region will be the 0.38 region. Sorry, let me see if I can lock this so that it doesn't move. Yes, it's locked. I've locked the Fibonacci stuff on the chart. Similarly, if I step down to the lower time frame of 4 hours, the same will happen. You will see a lot, much more activities around this region. One thing I have to clarify to you guys is that trading requires patience. Trading requires a lot of patience. If you have the capital, preferably swing trading is good, it's best. If you have the capital, you don't have the time, you understand the tool, the use of the tool, you only need patience. Then you go swing trading. Swing trading is where you make use of these layers, and in long term you are sure, irrespective of the retracement that is happening within, that your market is guaranteed. Now in the daily time frame here, as soon as this touches this and retraces back, and it comes back here, then it retraces back, and I'm not using this in isolation, but this has given me a lot of information that, hey, you are trading within the 0.23 region, and price, it would either break it or it comes back to this region. Now, looking at the another tool I use here, I will only place it. Okay, I won't. There's no need to place it. It's called the XABCD pattern, but I could explain it. Let me see. Do I place it? Okay, let me place it on this chart for us to see. We have this as the X. This is the A. This is the B, this is the C, and this is the D. So what this pattern does is it has a rule. The rule is that between your, okay, let me take it out, but I would explain it. I will explain it in a simpler term. We call this 1, 2, 3, 4, 5. If you are using the 1, 2, 3, 4, 5 analysis, between your 1 and 2, 3 and 4 should be inside 1 and 2. Okay, this is 1, 2, 3, 4. If you check, this position I marked 3 and 4 is below these layers, so it's valid. Then where's the text? Let me see. Let me just put, if I'm able to write the text. Okay, this is 1. Let me use color red. 1. Then I call this is this, sorry, it's not copying. 1. I call this place 2. I call this a 3. And then I call this a 4. And I call this point 5. So this 1, 2, 3, 4, 5, if this is satisfied, it's actually called in mathematics again, I think is the harmonic series. What it does is that it gives you a prediction that there is going to be a break, because after 5 it breaks this way. It also tells you where to put your take profit and where to put your stop loss. This is why I brought this inside. So you join 1 through 3. You also join 1 to 3, 1 to 4, 1 to 4, and join 2 to 4. Let me take this out. So you have 1, 2, 3. Okay, 1 to 3, 5, 2 to 4. I will tell you the rules. 2 to 4. So the rule here is that 5, okay, 1, 2, 3, 4, 5. 5 is 1 and 3 are on the same line. 5 could form on the line of 3, or it could be below 3. It doesn't matter. What matters is that 3 and 4 must be inside the channel. So if it falls outside the channel, it's not an issue. That is for 5. So what this indicates is that immediately you see 5, then you watch out for the break. The break is that it's going to give you a run. It's going to give you a run that will also, if you take this the length measurement, measure this, you take the measurement of this to this, it gives you 89. So from where this new one will form, you could also take, that is, you could also take 89. Where is 89? 89 will be 85, 70, 89. This is 89. So it will, which is guaranteed that immediately you are able to count this 5. Then from the begin, where 5 begin to go down after a retest on that line of 1 and 3, then it's going to give you the same length of 1 and 2 downward. Okay, so which means in this case, a take profit, that is, if I'm entering this market, this is what you do. You enter from this turn, you take a reading from this turn, which equals the length of 1 and 2. In this case, 89, 89, 87, 88, 89, 89. I want 89 on the dot. Yeah. So you see, this is 89. So then your stop loss would be some distance above the point of this, the high of when this run started. So what happened here is I actually bring it on top of this, which why that is on top of, you see it's very, very, very close. Why I did it this way, that if in case it's going to fail, it takes little impact away from me. This is how how well I could trust this run. You see, now there are two things you consider here. I told you the Fibonacci layer here, if it breaks this, the next natural Fibonacci level is 0.38, right? And I told you that I use another tool which is called the Harmonic series. Here, if I want to use, I'll use the XABCD, but I'm not using the XABCD. I put the simpler one, which is the natural measurement, that you, after you're able to count 1, 2, 3, 4, 5 of this consolidation, ensure with the fact that 3 and 4 is within the layer of 1 and 2 inside. It doesn't matter if 5 breaks out of it. If 5 stays within it as well, it's okay. The next break, if it happens, is an indicator that a break is going to happen. If you're able to count this, when the next break happens, using Fibonacci levels, is going to go naturally to the nearest this. However, I use the Harmonic series calculation here, and I said that the 1 to 2 length would also happen from here to here, which I calculated as 89. I placed this. My stop loss is very close. Usually you could extend this beyond this. You can take it to some level above 4, the 0.4. But you see, if it goes against me, it takes me out here easily, which means this series has failed. What it tells is that if it's going to break this, then it's going back to 0 or even break beyond 0 and go up. Now, otherwise, it comes here. This is your first take profit. Take note of that. First take profit. Okay, let's no need to put a comment on that. First take profit would actually happen at the next Fibonacci level. Then, if it breaks this level again, now on getting here, it also consolidates a little, meaning automatically the level 0.23 becomes a resistance level for this, okay, while the 0.3 becomes the support level. And you see what happened? It came back, tried to break this, it did not break it, it comes back again, retested it, it come back the second time, test this 38, came back here, break it. This breaking here is actually a false breakout. If you didn't take profit here, then look at it here, it comes back again straight to this place. Now it again do consolidation within this and it breaks it. When it breaks this 0.38, the next natural place usually is the 6.18, which brings me back to this number. I had 89 here the other time. You could use this 89 multiplied by 2, which means you extend it. Instead of here, first take profit, 89 by 2 will give you 178. So which means I could actually take this down to 1. Where is it? No, it changes. Okay, let me leave this one here. Let me draw and let me take another one. What you could do is, if you still have this chart, if you still have the Fibonacci on your chart, what you could do is that you could take advantage. You could recreate another one as soon as breaking the zero, assuming you miss this opportunity, you miss the first opportunity. When you come into the market, you are able to see that, okay, it has broke the 23 zone. It's now on the 38 zone. Then you could also now know the next natural level to target, which is 0.618, if it breaks this. Usually, we don't use technical analysis in isolation. We listen to the market. Are there news? Are there fundamental new analysis that could actually change the course of the movement of the chart? Otherwise, and sometimes what it does, fundamental analysis only accelerates. It does not distort the natural order. Okay, the natural order still holds. So this is a glimpse of what Fibonacci does, and this took us back to see what happened in the past. What I would like to do is to take this out, at least through the recording. You'll be able to see, you can see this even if I delete it now. If during the recording you pause, if there's anything you don't understand, put a comment in the chat window. I would come back online and respond to your queries if there are any clarification you will need on this. I want to move to what is happening now, that is from last week till now, and see how this is still playing out, whether it still holds. Oh, super. You could see this is coming. I placed the Fibonacci levels since 2000, and was it 2000? I don't know. I can't remember where this is coming from, where we took it from now. Let me see. It's not taking us back. Control Y. I wish I wanted to go back to where we did. Okay, let me go back to the date we did our analysis. Remember, I locked. Yes, I locked. This is we did our analysis August 2020. That is when we placed these Fibonacci levels, and then now we are in December 2023. 3 years after. 3 years after, the level still holds. This is the zero level, right? This is 0.23. Look at what's happening around it. Look at it. Market still play around it. Look at it here, 0.5. There was a turn here, right? And then upward. So now using this analysis, what has happened at the zero level here? We saw that the market broke above the zero level. It came back. Okay, by the way, the market is in a trending, is in an upward trend here. So what I said that time is that we could reverse the reading of the chart. So in this case, let me go to the chart and reverse the reading. Extend left. I'll remove the extend left. I'll leave it as extend right only. Let me see what happened. Okay, I'll leave it as extend right only. Then I also want to change the labels to the right. So the labels are on the left. I want to move it to the right so that we can see it. It came to the right here so that we can see what level we are and stuff like that. So what other thing do I want to do? I also have to reverse uncheck this so that it will reverse the numbering for us. Now it's in the upward trend. Then we can, so 0.5, it bounced back, it went to, it passes 0.618, retested it, became a support for it. It moved to 0.786, it touched it, bounced back, then it broke it. So when it broke it, it came back to retest. Now, instead of sitting here at 0, it broke through 0, a lot of news activities and things like this. It broke through 0, it went straight up to create a very new high, which is here. It came back as support, it broke it down again. This is serious consolidation happening here. Okay, now it came through the one and it broke it again. What is going to happen here? It broke it, then it's coming back here and it stopped here. This is where it stopped yesterday. It stopped exactly at the 0 point. So the question here now is, let me take out this market. The question here now is, haven't stopped here, is it going to go back or is it going to continue its journey downward? And if it's continue its journey downward, what is the next natural place that it will stop? So this is Fibonacci for you. Again, it is a mathematical series that has proven over time that you it's real, it's a natural series. It worked. Now I have some I told you could not use a technical analysis tool in isolation. You always have to use it with a pair of other technical tools to give you an insight of what is going to happen. Ordinarily, I would advise that, okay, when you have unclear, when the events in the market are not too clear, if you are not too good in trading and you don't want to just play with your hard-earned money, stay out of the market and watch till when the major news that moves the market are over. Then you go back again and use your tools. But here, I would introduce some other tools just to check and tell where the market could naturally be going. So there are two things here. Either it comes towards 0.78, which is around 1934 region. It could trade towards this. Remember, this is higher time frame analysis. Or it could go to 1.618. 1.618. How do I see that? 1.618 would be I need to zoom this. Let me see. Auto. If I do lock, what happened? Good. So is it open? Because let me see. Yeah, 4.6, 1.618 is there. Let me change the, I'll leave the color of the background, use one color. I want to use red layers. This. Okay. Let me see. Sorry. I'm looking for something. Okay, trend line. This one, change this to dots for me. Okay, I'm looking for the next. Okay. Yeah. Sorry. Good. This is the layer I'm looking for. 2266. Today is 16th December 2023. I'm quoting the date so that we could use it as reference. What I'm saying is that following the natural Fibonacci sequence combined with fundamental analysis, if this market retraces back here and events happen in the fundamental fields, technically this market will be heading towards 2266. 2266. This might not happen maybe till within the first quarter of next year. This is driven by fundamental analysis only. Now, on the technical side, are there anything that is easily visible to the naked eye here? I'm zooming it out so that we could see if there are other things. First of all, a new high has formed. This was the peak before. It was broken here. Let me return this to candlesticks. So if you see this is the new high. The new high formed here, and there was a wick here. It is the wick that I highlighted here. So the next immediate natural happening around gold, that's XAU USD, would be that this market, if it reverses here, is going to trade into this box. Now it will trade into this box, and if it breaks this box, is heading towards the 2266 zone. I wouldn't know whether the upcoming news would have this movement happen for us, but again, this is what the tool is showing us. Let me see if I can return this back to its colors. I'm checking. I want to use multiple colors. I want to return it back to colors value. Yes, apply default. Yes. No, cancel. Good. So I don't want to take out this chart because I had done a lot to place it, so I will leave it as it is. So this is the use of the tool. Again, now if you read candlesticks patterns and what they tell us here, we had 1, 2, 3, then instead of 4, 5, it breaks it down. So we could do 1, 2. It's not in that sequence, right? So that the harmonic series would not work for me here. If I'm to use 1, 2, 3, it's not within it for me to predict where it is going to break. So, but again, it is within a channel. It touches this line here, it touches it here, it breaks it here. If this is a retest here, okay, take note of this. If this becomes a retest, then the next natural stop would be 1935. That will be the region this will be trading to after it breaks this lower low here. Okay, it will be heading towards 1935, 1934, 1935. Then from there it goes to 1867, and this is how to use the tool. As I said, combine it with other tools. Let me see if I have. I think no, this is not what I want to see. Let me see if I can. Yes. Combining this with the RSI, Relative Strength Index, we saw here that this is actually overbought here, which likely is going to, that's what's saying is that within this region, within this region here, it is actually overbought. what it tells us that as soon as you have an overbought situation, the next natural thing that happen is people begin to sell. That is, it begin to the market will begin to reverse. Okay, which it have we have an overbought situation here where you have twice it goes above 70 region, then the thing begins to go down. It went back up again to another overbought situation, and now it's beginning to come down. So what we don't know here now is that the RSI, relative strength index, is within 53. As I said, if this becomes just a retest here, instead of going back, if this is a retest, so what we are hoping, which the RSI is also telling, is that the RSI is facing downward, okay, which is actually a divergence, because if you look at this, we have the chart. This is going up, this is coming down. So there is potential that this market is not going to break this up. Rather, there is going to be a continuation market here that will now be taking us towards this, which is justified also by the RSI. I do have another analysis that I do, which is the engulfing candle. Okay, the engulfing candle approach here is that the body of this candle actually engulfed this completely. I will do another analysis. I'm combining analysis for next week. What we should potentially look out for is that if I place this box here, I have my rules for trading engulfing candles. I would let me use this color. So my rules for trading engulfing candle, is it visible? Let me change the sell. I use red for sell. My rules for trading engulfing candle would be that I will put a box around the candle, the body of the candle that engulfed the candle I want to use for analysis. In this case, we can see the green inside the body of the red. Let me lock it. Then from here, I will allow the candle to form outside this. It went out, right? It came back inside. So within the inside, I will look for the next engulfing within the inside. I count this as one. This is the second one, is engulfed now, which means for this to engulf, then it's going to journey down. What I do is I take the length. We are making an insight into next week market, which is here. This is 94.64. So what it tells me is that there are two approaches. I'll put many layers now for your take profit, okay, whichever comes first. 94.64. Where's my calculator? You can also calculate from your side. 94.64 calculator. 94.64 multiplied by 1.618. This gives me 153.12. So 153.12 153.12 no, sorry, 153.12. Let me take the drawing tool again now. So which means from here I'm taking 153.12. that is, it's coming towards the 0.618. 153.12. okay, 0.12 will be here. Let me see if I can get it. I'll stop here. Okay, so this is a potential take profit for this market. I told you I will mark different zone. I will mark the first one, 1884. That is 1885. Okay. 1885, where are you? Okay, here. Let me call it second TP. The first TP would be the exact length of this one, which we said is divide by 1.618, 94. So I will measure 94 from here. Here's my ruler again. From here. I'm using the body 91, 92, 93, 94, 94.64. Yes, 94.64 is at 1942. Yes, 1942. 94.64. So this is 1942.92. That is my here is my first TP. Okay. Then so first take profit, that is if this is going to continue, this is my first, this is my second take profit, and then this is a third take profit. The third take profit would be 1.68, 94.64, hold on, multiply by 2, 189.28. So 189 189.28 exactly here, 1849.13. 1849.13. This is my third take profit. Okay, now again, going by the Fibonacci levels and stuff like that, you see this is happening around the 0.5, 0.618, 0.78, and so on. So if you I have to reverse this so that let me reverse the scale, because so that we can read it, because then it will become a downtrend, not a uptrend again. So 0.23 region for the first take profit, 0.38 for the second take profit, 0.5 for the third take profit, and the last one will be the 0.618 for the fourth take profit, which is 1774. Remember these numbers, 1774. I'll put it there. Let me take it here. Fourth take profit. Where is it? Where is it? I'm not seeing it. Okay. Fourth TP. Let me see if I can move it. This is the fourth TP. Let me now move it. Third. I'm splitting them out now, so that because it's not a dating, it's also not horizontal, but note that these are potential regions of TP if the market reverse this time. Sorry, I want to reduce the scale. I want to reduce it. Let's say 10. No, 10 is too small. 14. Okay, and lock it. Lock. I'm doing this because I want to come back to it in the future. Lock as well. I want us to when we do future analysis, we would look at these numbers and tell how and see how they played out. There was a video, one of our initial videos, where I can't remember precisely, where we predicted that there is going to be a retest on this, on some of the Fibonacci regions. Once that retest happens, is going to go up, and then that many people did not took heed to that. I think the market went as high as 2147. A lot of people were knocked off the market because they didn't see it coming. All I were on the first initial high, that the market is going to return from there, and then boom, it blasted. So this time, again, looking at candle concepts, why this we could not say 100% that this is going to come down this time. There could be a need for a double top here or whatever it is, but again, this region is the region of the current high. The analysis I did here now is based on engulfing candle analysis. There could be some ranging here. Do we have enough market ranging within the zero zone? Yeah, we say from here, how many? This is in days, right? Let me measure how many days the market has been within this zone. This is like 13 days. There's enough candle. 12 is a good number. So there is enough candle to tell that yes, we've had enough trade within this, about 2.4 million trades within volumes of trade. So within these days, so that's 17 days, but 13 trading days. So we would say that yes, we have enough points for analysis that we could tell that this market is ready to move in the other direction. Okay, so again, not sure, but there is high probability that the market would be going towards this region. All fingers crossed. And so this is taking us to the end of this analysis. Very important for you to mark your zone is the Fibonacci retracement tool. Place it, know how to read it. We've tried to explain it. If I'm doing a recap now, I showed you what are the different layers of the Fibonacci retracement tool, and then we went as far back as 3 years to place this on the chart, and up to today, the one we place is still very relevant and is playing out. You could go randomly into any part of this and then check what happened. You will see that everything is still happening within the levels placed here. We did an initial analysis here where we did a test and see how it played out here. So you could also use that same approach anywhere within. There was a brief introduction of the Harmonic series that we'll make a separate videos for that on how to use the Harmonic series to determine. Usually it is used at either at a reversal point, the end of an uptrend, or the beginning of an uptrend. That is the end of a lower of downtrend. Okay, so whichever. Good luck ahead. Note that next week there are some high impact news coming up. We have, which is this, we have the building permits. That's going to happen 19 December. We have the GDP growth rate quarter on quarter. We also have the durable goods order month on month and core PCE. This core PCE also moves prices a lot. So these coming weeks before the end of the year would actually play a lot impact on the turning of market. One thing I have not done, which I would want us to do as a bonus at the end of this series now is to actually go beyond the weekly time frame. Let's look at the month in view. How has the market played out, and what is likely to happen next, to give us an insight of what to expect maybe in January or thereabout. Okay, I see here, let me scale this, remove the auto lock, auto fit to window. Yes, this is what, if we look at this in the higher time frame, this is what we have. This is just natural candle pattern studying. There's no you have one. Can I use this here? 1, 2, 3, 4, 5. Interesting. I'm checking if you have the harmonic series here playing out. This is consolidation, we'll say. This is a run. So I would say I will call this 1, I will call this 2. If I can call this 3 and this a 4, then I said 5 could be outside. So what happens next? We'll see a break and retouch, then downward. Okay, fingers crossed. I've not done detailed analysis of this high level, but it is worth looking into, right? I turn it to this. This is 1, 2, 3, 4, 5. It came down, retouch, then it breaks it up. Something is bound to happen here. 1, 2, 3, 4, 5, then downward, right? If I consider this as 1, 2, this has not, if this is 3, 4, and this is 5, then it came here, it turned. I will do it for that maybe in one of the videos if I'm able. This is 16th December. Towards either 30th or 31st of December, after the complete year, I will look at what it is and have a video as an insight for us to see what January market would look like. For those that have watched, please, it takes a lot of effort to make this type of video. If you have not hit the like button, please do so now. Please, I'm begging. Do the like, hit the like button, follow our channels. It is not easy to make this type of video. I will not be speaking to blank audience. If people are not taking advantages of the research I have done to put into this work, then it's not encouraging for me to continue. So I would also like to come back to your questions, provide answers to any part of the video you need for that clarification. And then if we also have one-on-one tutoring channels. This is on demand. If you like what you have the work you have seen on our channel, and you want us to have one-to-one discussion and guide you, mentor you on trading, how swing trading, day trading, scalping, whatever it is, then we have the tools for you. Thank you for watching. Hit the like button and please subscribe to our channel. Thank you. Bye bye.